Hi everyone, welcome back to Be Rich. Today I read an interesting article on Bloomberg, which I thought I'll share with you what the article is about, and then I'll talk more in detail about my views about it and what should be our strategy as investors in India going forward. The overview of the article was mainly that they conducted a survey, and in the survey they asked many investors across the globe, foreign investors, comparing where do they see the next 12 months opportunities for investment. Where would they like to invest right now? Where do they see their money going? Historically, China has been the first, and now Japan has been the prime candidates for this kind of fund flow and investment flow. But what was surprising was increasingly India seems to be the prominent place for investing for FIIs as of now. In the survey, India seems to have, when the question was asked, out of 390 respondents in the Pulse survey in Bloomberg, 48% of them have picked India as a prime place, followed by Japan at 31% and China at 21%. This is an interesting figure and number to be given to us because despite Japan's enhancement in corporate governance and China's very low stock evaluation, which is going through right now, more than half the investors are very keen to putting their investments in India. It only reflects the confidence they have in India because of the corporate sector, like the Tatas, the Reliances, and the Aditya Birla and the Godreges, and also the upcoming general election also seems to have a little weight in what their investment decisions are based on. Both India and Japan have seen record levels of investments in their key stock sectors and indexes this year. But India's has been propelled by economic growth, and Japan has been propelled by corporate reforms and mild inflation returns. So there are two different reasons why. India has been based on purely on expectation of growth, and Japan has been showing some mild inflation, and prices are finally starting to rise in Japan. Wages are starting to rise in Japan, so there's some good news in Japan. So that is another reason why Japan. But the reasons why the fund flow has been happening to these two countries are vastly different. The Indian equities right now, if you look at the average, is trading at 23 times expected earnings. That means the PE ratio of India's investment is 23 times, which is much higher, both compared to the US, it's much higher, and even much higher compared to their Asian counterparts. That means the Indian evaluations, stock evaluations are much higher. India is very expensive compared to opportunities in the US, opportunities across Asia. Indian opportunities are very expensive, but even that has not deterred them from investing in India. So, what is the reason for this? The main reason is because of what's happening in China. Though Chinese market has fallen 40% from its peak 3 years ago, the burden of deflation and property crisis in China is being one of the dampeners. And the other main reason for people not being interested in China is the current political environment in China and geopolitical tension between China and the US and Russia seems to be another reason why investors are very wary of investing in China right now. Like Anand had said in his previous video, China seems to be more and more keen on supporting Russia and is more and more aligned with Russian interest and seems to be in a confrontation stance with America. So this is leading to a lot of tension. So as an investor, I would be worried, especially from a foreign investor, investing in China right now because of the situation, at least for the next year or so. This survey is mainly meant for 12 months. It seems very volatile and has a lot of risk involved in it. So this is the main reason. Though the Chinese evaluations are much lower, people are not keen on investing in Chinese markets. 50% of the respondents, though the Chinese market is underperformed compared to India and Japan, they don't want to look at China. Indian stocks have attracted over $25 billion in net inflows through March this of the survey of the year, and while China has only garnered 5.3 billion. So you can see it's a factor of 5 is the difference between India and China in the month of March. So where do they see this economic growth in India? They feel infrastructure development is going to be a major highlight in India with significant government spending and increased planned spending till 2030. And they also feel that Narendra Modi's administration plans to modernize critical infrastructure will give significant boost in this sector. Also, the political stability is something which they're looking at, and they do feel the re-election that Modi will be retaining power and his economics policies will continue. But the funny thing is, majority of the people also surveyed when asked if the Modi does not win the election, what will be their view? Will it change? They said the election will have minimal impact on the market, is what they feel. So, meaning that even if BJP does not manage to secure the position, and there's a coalition or an opposition which secures a position, the key policies such as infrastructure and infrastructure development in India will be continued by any government which comes to power, is what these investors feel. And India seems to be the next manufacturing hub, which is the alternative to China. Major companies like Apple are expanding. Tata's have started expanding. Anand has spoken about this also, how Tata and iPhone exports in India are going to reach record numbers very soon. So, next is comparison between the Japanese equity and the Indian equity. Japanese stock valuations are seen very cheap and very stable to invest in, but also are gaining interest due to the ongoing corporate reforms initiated by the Tokyo Stock Exchange. But the economic growth compared to Japan and India, India seems to be offering more economic growth. Please keep in mind this is only for the next 12 months these investors are feeling. These are very short term. As a long term investor, we always look at 5-year horizon, 10-year horizon. So keep this in mind. This survey has kept it in a very shortened time span. The main reason why they don't want to look at China is because of the market challenges there in China, and the slowing economic growth and the ongoing issues in the real estate sector in China are making it less attractive. And the current deflationary environment in China offers little incentive for revenue growth and investment in China. So, as an investor in India, what does this mean? Well, as an investor in India, what this means is at least for the next 12 months to a year, we're going to see a lot more fund flow from FIIs into India. There's going to be a lot more interest in investment in India. And even considering the current geopolitical situation, investments in India will probably be the most lucrative place for them to place it in, because if in the geopolitical situation starts getting even more heated and China starts supporting Russia even more, because the recent sanction on new steel, metals which are being imposed on Russia, Russia seems to be leaning more and more on China, and China seems to be helping Russia more and more. And if this continues, and Iran takes the position also of supporting China and Russia, all against Western forces and democracy and America, India will be more and more inclined, leaning towards the Western allies and America, for the simple reason our market and our culture and our people are all tied together as one. And like Anand explained very well in the other video which we spoke about, this is going to create a situation where it is beneficial for them to invest in India and secure positions in India, even no matter what happens in our upcoming election. This is one of the main reasons why this current election cycle, though it's happening, though it's highly heated and it's charged environment in India, economically speaking and speaking in terms in our market, is going to have very little impact, because India as a whole has seen a only place where they feel investing is going to be safe and return on investment is going to be good. So keep this in mind. Companies like Tata's, companies like Reliance, the Aditya Birlas, the Godreges are at one level. There are big renowned brands and they are going to be doing well in terms of inflow. Our banking sectors like HDFC Bank, ICICI Bank, those will also be doing well. But also there are going to be pockets of opportunities for smaller companies and up-and-coming companies in India if the FIIs see there's opportunities there. So do your homework. Do keep your eye open. Do dive in deep into our companies and see where you find these pockets of values, because there's a good opportunity for seeing growth in the next foreseeable future, at least from the standpoint of this article. I do encourage you to read this article. It's available in Business Standard too, if you subscribe to Business Standard, and it's there on Bloomberg. Do read it. It's a wonderful read. It's very encouraging to see this as an investor. And I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.